Day trading or swing trading, two powerful strategies, but completely different lifestyles. One demands speed, screen time, and precision. The other rewards patience, planning, and time. In today's video, we're diving deep into day trading versus swing trading, the pros, cons, risks, and rewards. By the end, you'll know exactly which one fits your personality, schedule, and financial goals. Let's get into it. Day trading means entering and exiting trades within the same day, often within minutes or even seconds. These traders thrive on volatility, using tools like level 2 data, order flow, and fast technical indicators. Common assets, stocks, forex, crypto, futures, anything with strong intraday movement. Key features: no overnight risk, requires real-time focus, uses lower time frames, 1 minute, 5 minute, 15 minute, high frequency, lower average gains per trade. Swing trading is all about holding positions for days to weeks, riding the waves of larger price movements. Swing traders rely heavily on technical analysis, chart patterns, support resistance, moving averages, and sometimes combine it with fundamentals. Key features: positions held overnight, lower trade frequency, higher time frames, 4H, daily, weekly, more time to plan and less screen time. Let's talk mindset. Day trading requires fast decision-making and emotional discipline under pressure. You need to manage rapid gains and losses multiple times a day. Swing trading, however, demands patience. You'll need to hold your nerve through price fluctuations, trust your analysis, and avoid checking charts 24/7. Ask yourself, can you sit at your screen for hours? Do you panic during drawdowns? Do you enjoy fast-paced action or slow strategic moves? Day trading. Pros: no overnight risk, daily income potential, more trade opportunities. Day trading. Cons: emotionally intense, requires full-time screen time, higher commission/spread costs. Swing trading. Pros: flexible with day job or lifestyle, less screen time required, can yield higher returns per trade. Swing trading. Cons: overnight and weekend risk, fewer setups, emotionally harder to hold through volatility. Both styles require different skill sets and tools. Here's what you'll need to succeed in each. Day Trader's Toolkit. Level 2 data, fast internet and reliable broker, scalping strategies, mastery of indicators like VWPA, RSI, MACD, low time frames. Swing Trader's Toolkit. Daily chart analysis, patience and a journal, trend line, support, resistance, moving averages, occasional use of earnings reports, news events. So which one should you choose? If you have full-time availability, love speed and quick wins, can handle rapid decision-making, then day trading may be your game. But if you have a day job or busy schedule, prefer well-thought-out plans, are comfortable holding trades over time, then swing trading is likely your best fit. Remember, you don't have to pick one forever. Many traders switch styles over time, or even combine both. Day trading and swing trading are both powerful. But the right choice isn't about which one makes more money, it's about which one matches you. Test both on a demo account. Get to know your trading personality. The strategy will follow. If this video helped you, like it, subscribe, and drop a comment below. Are you a day trader or swing trader, and why? Thanks for watching. Now go sharpen your edge and trade smart.